everyone, welcome to the Stock Market Morning Prep video for Tuesday, December 16th. Another crazy day in the markets. Markets continue to sell off, and that is because of crude oil. We have crude down virtually every day since June, just about, other than a couple of small days that we had bounces. And this is an important commodity because there's going to be many oil producing countries that are in big trouble. All right, now where is oil going to go? No one really knows, but off the technical analysis, I'm going to show you some key points. I mentioned 56 was one, and it smashed right through it. And when you get to this type of euphoria, you'll see in the charts that we're going to have a violent snapback rally in crude oil. And it's going to be violent because there's so many people short. And this commodity has gone parabolic to the downside. And we need to know this because at that point, then I think the markets will stabilize. And this is just an overreaction to what oil is doing. As we speak right now, oil's down 3.97%, touching $53.62. Unbelievable. We're going to show that to you in the charts. I'm also looking at a couple of catalysts that are coming due this week. We have the FOMC meeting that has started today and will conclude tomorrow. I think that major firms have repositioned themselves, obviously because of the tax selling, number one. Number two, FOMC on Wednesday, probably lightening up their book. That coincides nicely with the quadruple witching that's also due on Friday. Now, when you have that, I'm guessing, based on the analysis, okay, again, on my opinion, that I think after the Fed FOMC minutes are concluded and done, I think that the markets will start to bounce. And I mentioned the seasonality trends that occur. We are coming in some seasonal strength between now and the end of the year. And I do think that that will still happen. There's no market crash. There's markets are done and over with. No. Let's get into January, and then we'll start working on our analysis for January because I do think the markets will be ready for a decent correction come 2015. Is it going to happen in the last couple of weeks of December? I doubt it. But again, anything can happen. Okay. Again, matter of my opinion, what I'm seeing in the charts. Now, I'm looking for a bounce in the next day or two. If the markets were to sell off really hard today, this morning, I would probably see some stabilization coming into tomorrow. And then once the FOMC minutes have concluded and their statement is out, nothing changes, then I think you're going to see a little bounce in the market going into the end of the year. Okay, now let's go right into the charts here. First, I want to show you a couple of indicators why I think that we're ready for a bounce. We have the McClellan oscillator. Actually, this is I apologize. This is actually the one I showed you yesterday. The other one didn't take the snapshot. We're down about right around here, around 80 or 90, I believe, where now we are in washout levels. Okay, so just keep an eye on that, ready for a bounce. That doesn't mean I want you to buy the market. It means I want you to be alert and be prepared that when the market does change and starts to turn around, and you get your signal for your trading plan to buy the market, that's when I want you to be ready. Okay, so we're looking at the McClellan oscillator down here. Okay, now the VIX, and as we all know, every time the VIX breaks outside of that Bollinger Band and closes back in, we get a buy signal in the market, and this is what we had today. We have a close yesterday, excuse me, and we came out of the band 2 days ago. Yesterday we closed inside the band. Now today, if we close in the band today, that would be a buy signal for the markets, okay? And this has got to be on a closing basis because as of right now, we'll probably open outside the band yet again, okay? So let's keep an eye on the VIX. The VIX is telling us that we're getting to an area where of a level of extreme fear. Now, really funny, if you look, the VIX was down 3% yesterday while the markets were also down 3%. That usually does not happen. It's inverted to what the S&P and what basically equities are doing. So this is an unusual phenomenon. It does happen every once in a while. But let's see what happens today. Watch that VIX, because if the VIX starts to break out higher and we get a close back in the band again, we're going to still need that other close in the band for tomorrow. But keep in mind that we're almost there for a washout, looking for a bounce. Okay? I showed you this yesterday, advanced decline. We are now well down below negative 217 washout levels, and I am looking for yet a bounce again in the markets. And again, it could be a day or two. Okay, we got to see oil stabilize a little bit because right now that's the market's fancy is oil, and oil needs to stabilize or at least wash out. Speaking of that, let's get right into it. The bullish percent ENER, we're at 2.33%. Okay, can't go any lower than zero. And look at what happens when you get up here. We get a nice big bounce. So crude is, to me, is ready for a bounce, and I mean ready for a decent bounce. Does it bounce and go higher and start? No, I think crude is in a major downtrend. But when you get levels like this, and you can see this is a 5-year chart, this is total destruction of this commodity, and it has gone just alone from June at 107 to that virtually straight down. This is a weekly chart. So 56 is where I mentioned to you on yesterday where was the levels. I think it was beginning of the week, and sure enough, it smashed right through it, trading at $53.60. This is a 20-year chart. In the bigger picture, if we lose this area here, there's a little fib cluster at 51.50 area, $51 and then 51. If we lose that, then I do think that you're going to see 35 or 35 to 40, which if you see this thin zone, if we smash through that, that thin zone of this volume profile is like a magnet. It'll just suck price right back down to this 35 and 40, and then it's going to create havoc to the world economies that are heavily reliable on crude oil. Okay, so let's watch this, and I don't think this is going to happen this year, but when we come into January, let's watch and see if that does happen. But I wanted to point out the volume profiles. Okay, now let's get closer here, and this is the daily chart of crude oil. I wanted to show you a fib cluster here. We had a fib cluster right around here. We smashed right through it. We have now another fib cluster, which is right up in this area, which is between 50 and 52, 50 and $51. Okay, this is the area where this is going to need to hold. We're not there yet, but this is where I think the markets are going to bounce. I think if we get a big push lower today or even tomorrow into this zone, I think you'll bounce into at least the 8 EMA, okay, on the daily chart. Then you have that cluster that I was expressing right around here, 35 and 40. So you have another decent fib cluster down here, and that's way, way away. That doesn't mean it can't get there, but you can see the RSI MACDs are extremely oversold. So I'm looking for a bounce into the 50-51 area. Since we lost the 56, the next area where logically would be a bounce would be that 50-51 area. Okay, now that's crude. Let's go right into the indices. We've already hit all of our targets to the downside on this gap fill area. So we just filled the gap on the spiders. You can see extremely now we're getting oversold here, which is good because we're unwinding our overbought reading. And we are coming into some seasonal strength in equities. I mentioned that to you yesterday. Again, diamonds hit our target. If we don't bounce, which we will bounce, the next target, if we don't get back above this area, this gap area, would be the 200-day moving average. Okay, and on most of these indices, transports hugged the 50. Thank God it stayed above the 50. Now we need to see this thing start to move back higher again. IWMs literally took out the 200. So the 200 now has been violated. It needs to get back up today, or at least by tomorrow, and then start to move higher again. Otherwise, the IWMs will put pressure on equities. It is one